Textron reported last Friday, but my power was out. So we're going to talk about it now. This is, for those who don't know, an industrial conglomerate. They make everything from snowmobiles to business jets to golf carts to helicopters to a whole range of other things.
Ticker
This
is TXT, right?
Yes, TXT. And this is, like you say, this is a stock advisor recommendation. One of the poor performing one. I don't know exactly. I think it's maybe down 16, 17% since the recommendation. It's
And
down
the market's
13.
probably up 70% since then.
Right. I can tell you for the year, it's still down about 13%, losing to the S&P 500 by maybe 20 percentage points or so, off 30% over just the last 3 years. The issues, so this is a conglomerate. They're in a lot of different businesses, and it's almost been like a Keystone Cops show. Every quarter, there was something wrong somewhere, and it was always at a different place. It felt like management was just putting out a fire and another one was coming out. We had a series of earnings misses, a series of maybe next year, and investors don't tend to stay around for this. But last week they released third quarter earnings, and they actually beat a solid beat. They earned 53 cents per share. Wall Street was expecting 35 cents. That's a very different story for them. And yeah, sure, some of it was a lower tax rate, but there wasn't a lot of drama in the quarter, which for Textron as an industrial, that was very refreshing to see. We still have issues. COVID is making things very uncertain for business jets, and they really need Cessna to be strong. But their book to bill was 1.5x. That means they brought in 1.5 times the business that they build out. So that is a sign of growth. And that, for this time of year, that is surprisingly good. It is hard to find a third quarter book to bill in business jets, if you go back to the last 10 years, that was over 1.0. So that tells me that there's something there, which we are 10 years since a replacement cycle. Fleets are aging. There is pent up demand there. So we have Cessna as a potential catalyst. The company's Bell unit, the old Bell helicopter out of Texas, is vying for two very big multi-billion-dollar Army awards. I think they will hold up regardless of who's in the White House. And I honestly think it's too soon to say, but I would be shocked if Bell doesn't win one of them, worth upwards of $40 billion to replace the Black Hawk. We're not going to know about that till late 2021. We're not going to see deliveries to 2023. It's a long way to wait on this stock. You've already waited a long time if you're in it, but with Bell and Cessna, for the first time in a long time, there's reasons to get excited. There's real catalysts on the future. And so there's at least reason for hope in a stock that really has missed out on an aerospace party pre-COVID and was really a dog of this sector for a long time.
Yeah, and the company recently announced, correct me if I'm wrong, they're cutting some costs in the Cessna group, right? They're really trying to bring their headcount down and try to
This
do
has
some
been a
things.
whole series of things, and I'll be honest too. I mean, they're big. They have big competitors in this. Bombardier up in Canada has had a lot of trouble. I really like the General Dynamics unit, Gulfstream, and I think fortunately, I think there's room coming into this market for a lot of sales, because again, you really have to go back to before the economic meltdown to see business jet sales. You have a lot of corporate fleets that are aging. I think everyone wins here eventually, but COVID is yet another twist in what has really been a tough tale for this company and for the business jet market in general.
The win is the key, right? That's the thing we don't know. Lou, thanks for that.